Hey guys, Mike here. So Cathie Wood at Ark Invest did an interview recently, and I like to bring you, what she says, because a lot of you guys are invested in her ETFs or the types of stocks she invests in. And so this one was a really interesting one because she said something that really, if you listen to it, it tips her hand at what she's going to do, her plan for 2022. And if you really look at it, she'll explain. I've always talked about 2018 for the last probably 2 months. That's what she references. And so it's not just a long-term strategy. She is implementing a second strategy as well to take advantage of the volatility we're having in this market right now. So she's going to talk to you about that. And obviously, ARK ETFs have been just obliterated. I mean, if you're a dollar cost averaging into these ETFs, tell us in the comments, how many times have you said they can't go any lower? There's just no way, right? And then the start of 2022 has been horrific for her ETFs, and I mean obviously all stocks in general, but especially growth stocks that she holds, right? And she's going to tell you exactly why. I think she's really right. I mean, there's no doubt in my mind she's right. A lot of people are betting on this as well, what she's going to talk about in the interview to happen. Maybe not in the next 3 months, 6 months, but sometimes this year. And so if you get anything out of it, hit the like, subscribe button. I really appreciate it. And let's get right into this. And so, of course, coming into 2022, some people had high hopes, but obviously the ARK ETFs have just been decimated, down in between 26 to 29%. And last week, she explains why that actually got worse.
The space went into a little bit more of a tailspin this week after the JP Morgan conference. And the purported reason for that was, we didn't get any real M&A out of this. This is usually when big announcements are made, and typically there are a few very good M&A events. So what we're dealing here with is really the longest duration stocks in our portfolio. And if you've been watching, we are continuing to add to these names every time they come down. Now, many of these names, again, you've got algorithms at work, and you've got an inflation fear out there, which many people think means higher interest rates. So these strategies that are inverse to ours suggest to me there's a lot of conventional wisdom, no problem shorting these stocks. They have only one way to go. Algorithms have helped that along, the momentum-driven ones, certainly. This is what makes a market. And if we're right, they are going to have to cover. And I think we're right.
And this is something a lot of people are betting on, right? That these institutions, these algorithms that have absolutely shorted the living daylights out of growth stocks, ARK funds, they will eventually have to cover. It's going to happen. And usually when that happens, and we've seen this, we've witnessed this with multiple different stocks now, when they have to cover, that's when you see this explosive or parabolic move up. And it happens really fast, right? Because they're buying all those shares to cover before it starts to go up, which automatically starts to drive it up. And then what happens? The momentum has shifted. So those same algorithms, right, that are focused on momentum start buying in and pushing it even further up, okay? And so that's what, she's betting on. And, there's no doubt. I mean, there's so many stocks. You just look at, like, the most shortest stocks out there. There's a lot of stocks that are over 20% of their float is shorted. And, we've seen this, especially probably from February to June of last year, of how shorted a lot of those stocks were and how far they will push these stocks down before they will let up at all and give them any mercy, okay? And, this market is different than obviously 2020 or 2021. This is a lot more volatile market where you're probably going to see multiple corrections throughout. Maybe, who knows, if we get a 20% move. I mean, the NASDAQ, is not far off of 20% at this point in time, with these massive 2 to 5% swings on a daily basis, where you'll be down 2% on NASDAQ, you'll end up 3 by, or the other order where you're up 3 and all of a sudden you're down 2 by the end of the day. That is the definition of volatility. But what she is trying to say in this next clip is volatility actually can be your friend if you know how to use it, because she has done this before at Ark Invest in 2018.
In fact, in a bull market, volatility is your friend. Certainly that was the case for us in 2020. The reason it has become a bad word is since the tech and telecom bust, we have seen every bear market accompanied by an increase in volatility as measured by the CBOE's VIX. And yet, because so many people in the business joined after the tech and telecom bubble, they do not remember that we have seen volatility move up in up markets for extended periods of time. And I think we will go back there again. I think 2020 was a glimpse at that. And we use the volatility to our advantage. We know that disruptive innovation is controversial, and with controversy can come volatility. So we use the volatility to our advantage. And very often you will see that trading around volatility adds significant alpha. In 2018, when the market was down, our trading around Tesla alone, now granted it was one of the more volatile ones, our trading around the volatility of Tesla alone added, I believe, 175 basis points to performance in a down year. That had nothing to do with how Tesla did. That was simply our trading. So we do use it. I believe we've used it massively in this last year, and the proof will be in the next few years. Well, we'll see if this leaning into the negative sentiment and declining prices is going to pay off. It has every other time in my career.
And this is what she's talking about right here, guys. This is the VIX. And so you can see right here, since June of 2021, the volatility has steadily just increased. As it's ramped up, it just keeps increasing. Okay, the same thing happened in 2018. And you can see right here, when the VIX is at that peak, when it starts to drop like a rock coming down, that's when you get these big moves up, okay? And I'm talking about fast moves up, okay? As you can see, from December 3rd to December 15th, I bet you money we had a big move up. And if we move to the S&P right here, you can see right there, that is a big move up. And if we measure it, you're looking at a 3.8% gain on the SPY in just 12 days. And then we come over here to December 20th, you can see right here, you end up with a 5% move in around 9 days. And I'll bet money if we go to the VIX, it's dropping rapidly. And so if we move back over to the VIX and look at December 20th, you'll see right there, that was the peak right there, December 20th, and then it dropped off like a rock. That's when you get those big moves up. And if the indexes are moving 3 to 5%, the stocks are moving much more than that. And then another thing you can look at here, guys, also, she was talking about lean into the fear. And, you know, if you look, this is the fear ingredient index I started using. It kind of tracks how many stocks are actually in an uptrend and above their 6-month EMA. And so if you look right here, anytime you're down at these levels, 26 to 35, somewhere in there, and this changes, you know, year to year, whatever, but, you know, that's when you get these big moves up. And so if you look at this time frame right here, from October 4th to November 5th, you know, we'll go back to the SPY, and I'll bet money there was a big move. And you can see right here, you're looking at a almost 10% move in 35 days on the SPY, which means stocks were just going parabolic. So, for example, if you pull up Tesla during that same time frame, Tesla moved up 53% in that exact same time frame because people leaned into the fear, they bought into it. And then even looking at Zoom, which has just been destroyed, during that same time frame, as bad off as it's been in the downtrend, it even went up 13%. To November 5th and did a drop off, but even it was moving up during that same time period. And look at Amazon during that same time period, because the big cap, you know, moved up almost 11% during the same time period. And of course, I don't think Ark uses a fear and greed index. I think they have their algorithms set, you know, strictly on the VIX, where it's at, and they have their data points of which they'll buy in and sell. And so that's what she's telling you. And if you notice, she just bought Tesla the other day for the first time. I think it's been 6 months, I believe. And so when did she buy? If you look at the dates for purchases, it was almost right at the peak of the VIX, hitting that trend line, right? And so obviously it's dropping off. And so, she's looking to probably trade. I don't think that's a long-term deal for her. I think she's telling you she's going to try to trade it. And most likely, because remember, Tesla hit a nice big drop from 1,100 on down, she's going to try to swing it like she did in 2018. And if you look at 2018, you're going to have many opportunities to do this if it's that kind of year. As you can see right here, I mean, this was a 10% drop. And then, of course, it ends up moving up. And you say, okay, great, we got to be out of this mess. And so, let's go ahead and move up and be done. And it pulls back like another 5%. Then it pulls back another 8%. And then just look at the volatility. I mean, this is just massive, massive volatility, up and down, up and down. But what happens? You go on these big runs right here. See, that's a big run up. Even though it's volatile, it moved up almost 14% during that time range. And then, of course, we fall off a cliff. But remember, markets don't go straight down, right? Big move down, boom. Big move back up. Look at the percentages. Big move down, big move back up, and then there's the crash. Boom, all the way down below 20% on the SPY and the QQQ. But what happens? Here's the parabolic move. Look at that. Massive move up. I mean, it just took off, like what she said, a coiled spring, which I think was the phrase she used. And so that's what they're betting on. So they're going to do their, dollar cost averaging in. They're going to use the volatility to swing trade a lot of these different names. And, Tesla's one of the most volatile out there. So they will do that. They're going to go ahead and pull out the playbook from 2018, which I think is smart. And so, and that's, something you can even do. I mean, if you look at, look at the VIX where it's at, look at the fear and greed, whichever fear and greed index you want to use, if you want to use two different ones, and you look at some other indicators, but that's usually where those algorithms are set as well. And that right there is going to let you know there's going to be some type of move. It may be short-lived. A lot of people are waiting on that right now because we were so high up. We hit that trend line. We're trending down. And so I think that's why you see a lot of option players also playing for the VIX to come down, which means the averages should move up. As that chart shows you, we just don't move straight down. Okay, when you bleed out this long, it's been over 30 days of bleeding down, and you get these massive swings every day. People are looking for that 3 to 5%, move back up before there might be a move back down. Don't forget, we got earnings next week, and I believe it's Google. I'm not sure. I think it is Google though. There's a report, but everybody's watching these FANG stock, earnings, because especially the forecast, because they make up such a big part of the SPY and QQQ. So if they're going down, doesn't matter what else is going on in the market, the indexes are going down with them. Okay, and so everybody's really looking to see if they can pull up. Apple killed it during their earnings. Microsoft had a good earnings call. And so, I think, and does Amazon report this week? I think they do. There's so many of them, I have trouble in keeping up with all of them. But, that's what people are really trying to keep an eye on, because the FANG stocks almost by themselves can pull the market up. Doesn't mean Cathie Wood's stocks are going up. Doesn't mean your stocks are going up. But the indexes can go up just from those stocks alone. Plus, obviously Microsoft's not a FANG stock. That's why it's FANG plus M. I don't know why they just don't make it a part of it. But anyway, and so, that's what we're looking at this week. And so, yeah, is Cathie Wood right? Sure. But remember, she says multiple times in the interview, 5 years. Got to look 5 years out. So I don't think she's expecting some parabolic move maybe this year, but probably next year or maybe mid next year. But it's going to happen unless something that's never happened before, happens. What happens? The markets, yes, they don't always go up. It takes time for them to go up. They can move sideways, as this 2018 chart has showed you, and I've showed you many times. I think 2015 was kind of that same way. But when it moves fast. And when these shorts are going to have to cover, and I think they're going to have to cover at some point in time, yes, that's what's going to cause the big move up. That's what a lot of people are betting on with small caps, because they've just been obliterated. The Russell 2000 is a mess, and everybody keeps saying can't go lower, and it keeps going lower. Okay, but when it does move up, it is going to be a sight to see. Let me tell you. So we'll see. Let me know what you think in the comments. Do you think Ark and all the rest of them are going even lower, or do you feel like there's going to be a bottom here pretty soon? I always like your thoughts. And so if you got anything out of it, hit the like and subscribe button. Also, don't forget, if you want to subscribe to the Daily Upside, just click on the link down below. You subscribe to the Daily Upside, put your email in, again, completely free.